In this video, traders, we are going to look at the 2-day opening range trade. Yes, this is over a 2-day span using an initial opening range. Some rules and some ideas for this setup. Stay tuned. Hey guys, very warm welcome to you. Right, so as always, not a recommendation to trade or anything like this, just an observation of something that maybe is a chart pattern to pay more attention to. I'm just going to check them out, as I linked to them in the description below. And this is the kind of thing that works well with their share CFD offerings. So something like Tesla, super volatile at the moment, super volatile industry. If you like volatile stuff to trade, Tesla's kicking off. You've got things like Twitter, you've got things like Nike, all the kind of main US shares that you would probably want to trade. See in the market section the type of things they offer, and obviously the forex pairs, all the things other things you like to trade, and go see if they're right for you. You can open a demo account, do all the usual stuff, and they're regulated, and all the other things you would expect from a broker. Okay, so this is the 2-day opening range breakout, and those of you might be going, well, what are you talking about? How can it be a 2-day opening range breakout? So sometimes I've observed this happening, especially after a key event, which is why it works so well on shares rather than forex. Now, I know a lot of you like your forex stuff, and listen, plenty of strategies and setups to trade with this. This is something for markets that have a specific opening time. So ideal for those share CFDs offered by Pepperstone. Ideal when you've got the opening bell, ding, off we go, we have some type of action. Also ideal if you have some sort of news event that has driven this market to gap up or gap down, this stock to gap up or gap down. So you have a scenario where you have a big wide opening range. An opening range, some people argue 15 minutes, some people argue 30, some people argue an hour. Whatever, I like to use 15 minutes. Use a 5-minute candlestick chart like this kind of thing, and I'm looking for the first 15 minutes. So when we get that opening range in the first 15 minutes, if it's really wide, I say usually after earnings, something like that, then I will frame the high and the low of the opening range. So there's my high here, and there's my low here, and they are going to be my line in the sand for a breakout. Now, some people say, okay, you can take that on day one and it breaks out. Now, that's fine, and I think that's a feasible trade in its own right, but this is a little twist on it, because what you're saying here is, basically, once you've got that big first 15-minute range, and then price just sits in the range for the rest of the day and closes within that range. In other words, it puts the opening range in, but it doesn't break it in the day. You're basically saying this. You're saying, okay, lots of opening orders came in, lots of demand came in this example. We've got to drive to the high side, flip on its head, lots of supply coming in if it's a downside move, but lots of that came in, but yet we didn't see any follow through from the day. So we've got big supply demand imbalance followed by indecision. And now we've got that indecision, what's happening there? So we see this scenario where it sits there, nothing happens. Now on day two, what we could have is we could have a lot of people who are higher time frame players going, right, I've seen the bigger range intraday. Wow, the range was done right in the beginning. They've digested the news if it was a news driven move. They've digested the scenario, and now the higher time frames might be looking to unload stock, might be looking to buy stock, whatever move they break. Now what we see, and the kind of premise behind the trade, is that if we get a break on day two, we follow that break, so we take that trade. So let's say in this example, we've got a low here from day one opening range. Day two, later in the day, we break it out cleanly here and we drive lower. So the rules of the setup, and again, not a recommendation to trade or anything like this, guys, just purely observing some things that are happening in the market for you to go away, kind of digest yourself and make your own decisions on it. But the first 15-minute range on day one, you framed it. On day two, you're taking the trade in the direction of the move. And the reason this is kind of a nice little one to have in your trading setup arsenal is that you've got the indecision on day one. So a lot of people kind of take the first day break, then discarded it. But actually, you're having higher time frame players come in and go, you know what? Actually, this is overvalued. We're going to take profits. We've actually wanted to wait and see how it closed, because many players won't operate until they see the closing print. They're not interested in operating until they see the closing print. So this closing print not being at highs or not having an extension throughout the day is basically saying to everyone, hey, this is okay, but it's not that strong. Not everyone's piled in and realised this, and it's just ripped and ripped and ripped. You know what it's like, guys, we have great earnings. Sometimes you get that constant persistency of trend all throughout the day, closing at highs. More than likely, a little bit of a pullback on day two, and then a day three and day four drive. This is basically saying we had the initial drive, We closed higher, yes, but not a persistency of trend type day, not really extended away from the VWAP, not all those things that we like to look at. And so people might be then in two minds. The higher time frame guys with the bigger money might be saying, or the bigger positions, should I say, might be saying, okay, you know what, we didn't see consistency follow through. It's okay. We're going to kind of dump some of the stock now. We're going to take our position off the table. I've got a bit of a premium than we had a couple of days ago. Great. And that's when you get this move, especially maybe early in the morning, you often get this because that's when a lot more volume coming in, and later in the afternoon. So then you see higher time frame players coming in, and you can use it as a trigger point. You can say, you know what, when it breaks, I'm going to trade in the direction that breaks. So you'd probably be going short on there. And stops and targets, again, it depends on your risk tolerance, depends on what you're trying to achieve from the trade, the time frame you're trading, etc., how long you're looking to hold the trade for. If it's you think it's a multi-week trade, you might have a wide stop above the prior high. You might say that's wide enough because actually the risk order ratio is still 5 to 1, 10 to 1, because I'm looking for this to move for the next couple of weeks. If you've got a shorter time frame, let's say you're looking for, let's go right to the other end of the scale, you probably sit in the middle of this. Let's say you're more of a day trader, you might just trade that, keep a stop above the high, last prior high swing or something like that, ride it, take it off at the close, take a little chunk out of the market, move on to the next deal. Or somewhere in the middle, you might say, you know what, if it closes at lows and I'm short, I might look for a further move over the next third day, fourth day, fifth day, and see if I can squeeze a little bit more from this trade. So that's a 2-day opening range trade. Seems a little bit of an unusual one because what's the opening range while you're on day 2? But you can see how that makes sense. It's the drive initially that has the extended range, then the indecision, supply demand balancing a bit, and then it finally breaking the next day because people have seen those closing prices, because people have seen the reason it gapped up or gapped down, and now they're making a decision to commit capital one way or the other, or pull capital out of the asset. If they're right for you, keep it mismanaged, take care. See you next one, bye bye.